Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go over a bunch of different patterns. Not going over the thesis of the channel per se, but I want to make sure everybody understands how large of an opportunity this is, how big of a deal, the kind of a little bit better understanding of the setup. Um, Keep in mind that technical analysis, what that is, it's the interaction of humans with each other, and they leave these patterns over and over and over and over. I mean, even if you look behind me, you can see these patterns. They're all repeating, even the number of humps, all these things. And yeah, they may be shifted, skewed one way or the other, a little bit different. But what I'm trying to tell you, I guess, is if you can get some of this right, it's going to change your life. I truly believe that. If you have at least some money in it, it will truly change your life. Depending on some of these companies. I'm not trying to sell you anything here. I don't want you to go buck wild on some exploration company and have to go all ridiculous with the risk. But what I want to show you is kind of the reality or the overall big picture view of how the markets kind of move. And usually what happens is you go into a big consolidation period, you break out of that pattern, and then you launch from the pattern. It's a stable base to jump from, so to speak. It's a psychological containment that humans put on price. And then once it breaks that psychological containment, it's released to the wild. We would talk about cheetahs running after they break out of their cage, and then they run for a good time. And cheetahs can't run forever. They usually run a little bit, rest, run a little bit, rest, run a little bit, rest. And that's the type of movements that we're looking at. I'm going to just show you guys kind of the setups that we're seeing from a big picture view, and some of the ones that I get the most excited about. And I can explain why I get excited about it. Remember, the world, everything in this world is kind of, it's governed. There's certain things that we found out, have found about the world, like fractals and the Fibonacci. We'll call it Fibonacci retracements in the market, but it's found everywhere. It's found in your hand and the size of your limbs and how large it is for your hand. There's a whole bunch of different things. It's in seashells, it's in leaves, it's in trees, it's in like absolutely everything. And we can use that to our advantage because we can use some of these things to determine and predict, maybe not with 100% and maybe not with the degree that some people want, but we can kind of predict which ones are going to be bigger movers versus which ones are going to be smaller movers. And not all the times will it be that. I mean, you could have a company that gets bought out and has different management, and it kind of ruins the pattern before it if it was an old management team or something like that. But and there are some of those cases. But I just I want you to soak this in terms of technical analysis on the big picture view. The medical event in 2020 could not stop this move. If that couldn't stop the move, well, what's going to stop it? What is going to stop this move? And I know some people, they think we're going to have a crash. The crash is temporary. It's not going to be sustaining, I don't think. And if there is going to be a crash, it'd be in the overvalued stocks, and it probably won't come back for a while. But I'll go in here. I'll show you kind of some of the things that when I was developing the thesis of the channel, just kind of what I'm looking at from a technical perspective. In the blue here are expansionary phases of real estate. They were consolidation periods in the S&P 500 index. Anything that's got a blue kind of line or triangle pattern are consolidation periods. They were expansion phases of real estate in each one of these periods. It was by no coincidence that this was happening. And it might not have been an entire expansionary phase in some of these, but for the most part, they were. This one was a bad crisis, 1929, and it didn't go and break to the upside until about 1950. Now, oops. Now, if you had bought on this break, this chart pattern break here, and you bought it, and there was even a retest there, you can look back in 1950. You break out, did a retest. This is where I'd be a big buyer, and then you just hold on, hold on. This is about from 1950 all the way to the peak, I'd say, of 68 would have been a great period to hold. That's 18 years. You would have done very well for 18 years. And then, you know, we can throw kind of a pattern in here, and it's obviously very easy to see after. You know, we've got this kind of, whoops, you know, it basically comes in and shrinks up, breaks to the downside, does a retest twice, and then goes into a long consolidation period. But what I want you to get, or what I want you to really get, is we've got a consolidation period. It broke that consolidation period and ran for a while. Then we consolidated for a little while, which was an expansion phase of real estate from 1968 all the way till early 80s. It crashed, and then this thing basically looks like this. It consolidated here. And I drew it here. It doesn't really matter how you draw this. You can do whatever you want. But that's probably the best fit area. It broke out. It came back and did a retest. And then it launched higher. This is a launching pad. This was back in 82. 82 would have been a great time to buy and then just hold on, because look what came after. There's the 87 crash. That didn't stop it. Came all the way up, and that was your declining interest rate environment. All the way from 1980 all the way till 2000. And we were even had an interest rate decline after that. But this was the expansionary phase and bull market of commodities. This last one, this was a consolidation period. It broke this to the upside and ran even more. And now we've got ultra low interest rates at the top here. I think that this is probably going to go into another consolidation period. It could be a massive consolidation period, similar to maybe from 29 to 1950. It could be a big consolidation period. But notice that you always have a consolidation period and then a big move. Consolidation period, big move, consolidation period, big move. What we're seeing in commodities is we're breaking that big consolidation period, and this one's entering a consolidation period, just like every time in history. Here's the CRB index. We had a nice good run from the mid-90s, consolidated here, and then broke out. Probably something like that. Consolidated, break, and then we went into a big consolidation period, and now we're breaking that consolidation period again. We are seeing this across the board of all these different commodities. This is obviously the index. When you break this is the best time to hold, because we just broke out, and we're probably going to get a very big run out of it. It could be larger than what I even think, because if interest rates go into a new bull market, which means interest rates will increase, this could be more profound and have a larger impact, because more money is going to flow into commodities than other smaller commodity booms. Think of it like the 1970s. They had an energy crisis at the beginning of that commodity boom. We have an energy crisis at the beginning of this commodity boom. It's no mistake, or no, you know, the similarities are all there. And we've got gold going up. It's got its patterns where they go into a consolidation period, break, consolidation period, break, consolidation period, break, and so forth. And then we're breaking this to the upside just recently, and it's looking fantastic. So yeah, commodities are doing it. And looks like there's a lot of resistance up here at the 1920 level. And they're all creating these monster patterns that are breaking their monster patterns to the upside. Yeah, it's moving sideways a little bit. This is platinum. And then we're going to see a big old break. What makes you guys so afraid? And I know I read some comments and they're afraid of crashes and whatnot. It's going to be temporary if it does crash. That's my opinion. I don't think it will be knocked out forever. The world needs commodities. The world needs oil and energy. If we don't get that, nothing in the market will do well. If we are at peak oil, all those businesses are going to eat it. Currencies will eat it. Everything will. And I don't know if we are. I don't have that answer. But all these are looking like they want to go higher over time. And crude oil looks absolutely ridiculous. You get this nice big consolidation pattern, and we've broken that to the upside. Yeah, we could have a pullback. I'm not saying that it's just going to go straight higher. I don't necessarily have that answer. Natural gas is doing the same thing, breaking its long-term pattern to the upside, doing a retest move before this thing launches to the moon. And it's literally going to go like way up here. Everything we're doing is putting all the pressure on natural gas. We are going to overload this massively. And then all these companies, uranium, I mean, look at the Sprott Uranium Trust. Triangle, consolidation, boom, big move up. And we could be at the beginning of a very, very big move for all of these commodities. Copper's looking fantastic. It's breaking to the upside. Nice big, strong move last trading session. We've got rare earth metals doing the same thing. It's breaking out of its consolidation pattern. And someone made the comment, should we wait for a pullback? I don't know if we're going to get a pullback, guys. These, to me, look like they're ready to launch. I mean, this is a downward move. I call this the double booty bottom. And then we are moving sideways. And when this goes, it could be at any time. I don't know the short-term movements as well, but this looks absolutely fantastic for a very large move. And I'm seeing it in everything. Everything that, I mean, here's Hovenen. You break out of this white line here to the upside. I mean, see ya. Wouldn't want to be ya. Lenner Corp looks like an absolute animal of a long-term pattern. It went into a consolidation period from 2005 all the way till 2020. We've broken to the upside, and someone said, well, we could pull back. I don't know. This thing looks absolutely ridiculously good for a continued move higher. This has been in one large boom the entire time from 1974 at 7 cents all the way till $120. This is the XHB Home Builders Index, and this thing's going to the break into the upside, and we got nice good reversal patterns here. Could it come back all the way? It could. It could. But everything I look at is in these massive patterns, and IPI, I really like this one here, Intrepid Potash, coming on down, double booty bottom. I call it's a Wyckoff accumulation period if you want to know the technical name. Downtrend line's broken, and we've got this line here that's breaking. I mean, this right here, guys, it's GTG, good to go. This is one of my favorite little setups here. And I'm just seeing this, pattern after pattern, consolidation period, break, consolidation period, break. And we're seeing it in all these different companies. Here's emerging markets. Remember how you had that long consolidation period? This was the back end of the 07 huge consolidation period, break, and then the retest. This is going far higher, guys. What this is suggesting is that the dollar is going to go down. You can't have all of these things go up like this and not have it and have things be different than before. I mean, everything looks great, and this is a nice good cup and handle pattern. Breaking to the upside for Altius Minerals, ATUSF. This is another one I really like, and I'm just seeing this everywhere. So don't be afraid here, guys. I mean, if it were me, I would be a buyer in a lot of stuff. And I know there was some comments saying, I've got cash on the side or whatever. I'm putting my cash to work. I can't give advice. I cannot tell you guys what to do, period. I can't do it. But what I'm doing is I'm buying the heck out of everything I can. Me. What am I buying? I'm buying Intrepid Potash. I'm buying Altius Minerals Corporation on the break. I'm buying Wheaton Precious Metals. I'm buying Mosaic I bought before, just because I've seen it right here on the side. I'm buying uranium companies. Uranium companies look absolutely fantastic. And uranium is the most leveraged of all these, I think. That could be the biggest opportunity of anything that I can think through. Oil is another one. If oil goes to the moon, and let's say we do hit peak oil, hypothetically speaking. And I think at some point between now and 2030, that's going to happen anyway. What are we going to run to? We're going to run to natural gas? Yeah, maybe. But I think uranium is the most energy dense source that we have at the moment, fission, for nuclear. I think these guys are absolutely ridiculously priced. Anything in uranium, anything. And what's even more impressive is, like, I look at this Sprott Uranium Trust. This thing is gaining steam. We broke to the upside. Looks fantastic. And I'll be honest, guys, I loaded up in here. I did. I loaded up on this pullback. I am ready to go. And I know it may be scary to think, oh, we've gone up this much, and maybe I can do a fib retracement on this. If this is the first leg, here, and this is the pullback, we went right back to 0.5, 50%. We went right to the line on this pullback from here. Now, what would the projection be if this was a first leg move? We're going to use a Fibonacci extension tool. We're going to go right to the tip here. We're going to pull back, and then I got to scroll all the way up. A 1.618 move puts us at $211. If we go further than that, maybe we go to 300, and we're down at $60. There's a possibility that we blow through all this. I'm not saying that. I'm just kind of throwing out numbers. But the opportunities here are absolutely large. And if you look at not just uranium, and I'm using uranium because it's I think, one of the largest opportunities and also the most leverage in history. That one, I think, is just, I mean, you got to be there. But if you look at all of these companies, and I'll just pull up another one. We looked at oil, and we looked at the CRB index. Let's go back to the CRB index here. If uranium went up that much, and this was basically the first leg, oops. If this is the first leg, and then we might have a pullback and then get a huge third leg. And there's some people, if I could get a really big chart, it goes all the way back. You can tie the tops, and the tops went all the way up, and we could go all the way. We're talking like, I can't remember where, but it's a chart that goes up like this, and we could go all the way to like 1,000, because there was other contact points way back in the 70s and all that, and we could go way up there. If that is the case, if we repeat and go all the way up here, some of these companies, guys, like, we're just breaking the patterns. Like, this is the launching pad to launch from. And where we are going is massively higher. What this is, and if you were to just sit down and think about it, if you sit down and think, all the money that they printed didn't get into the system, it didn't hit the CPI, it all went into stocks. We could see it in our stock to commodity ratio. I pulled that up. This is what that stock commodity is. We've never been this low with that ratio so out of balance. Here it is. It's so out of balance down here, where we've never been this low in any one of these periods. We're all the way down here. We're like down here. We are cheaper than where we were in the beginning of the 1970s for commodities. How is that possible? How is that possible? It's because they printed a bunch of money and threw it into stocks. That's how it's possible. Now, when this unwinds, when this rotates back, all of that money, all those imbalances could swing to the opposite side, causing and creating a massive inflationary period. Massive. It'll be out of control. So what I'm saying is, the opportunities are so large. Be cognizant of how the markets move, of how people interact, and that we're just breaking these patterns. This is the beginning of a new era. That's why they're all breaking out of their patterns, those consolidation patterns. So be patient. Get your shares, because we're seeing it all break, and they're starting to move right now. And hold on. I'll be here with you guys. You know, I do my daily updates. I'll be riding this stuff right alongside everybody. I will be creating a website. It'll be finding-value.com. I've started it. It still needs some work. I haven't decided if I'm going to make it a pay for website or not, but I probably will, just because if I'm going to do this, if I transition to a full, if I'm doing this full time, I need to have some income of some sort, I'm not going to do it because I mean, I'd like to make it free for everybody, but I got to have some income of some sort, and I can put a lot more effort into the website if it proves to be successful. So if I decide to do that, we'll see. We'll see what happens there. But this is all incredibly exciting. We've just basically broke out of that launching pad, and we're going to launch soon. So hopefully you guys are positioned. Hopefully you're doing all right. Be patient. Make sure that you've got the right companies. I go over a lot of companies. I spouted some off here that I really like, and what I've accumulated. And just just to say, Intrepid Potash is also an energy service company. It's not just a fertilizer company. Either way, they're both excellent to have exposure to both. But either way, guys, hopefully you enjoyed the clip. Give me a thumbs up for the content. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.